was the niche or the starting point for you? Some people start with stock. Most people start with stocks, I would say. Some people get pulled into options or something else, or technicals. So what was it for you?
Yeah, the starting point for me, the aha moment, if you will, I was studying to be a equine veterinarian at Duke, and I got into this trading contest, and this was in late '88, early '89, and basically I was starting to day trade when nobody was talking about day trading in the late '80s. The market was very volatile, and it was on paper, but I was just using stocks. And I was basically saying, hey, there's a pattern that's developing here. These stocks get hyped up on takeover rumors. This was the late '80s, and basically there's a lot of takeovers happening back then. And I would notice they would fade back down for a day or two, and so I would just basically scalp them, basically back down. This is before I ever didn't have a single course on trading at Duke University. That had an econ course, entrepreneurship course, investments course, but it didn't teach you about actively trading. It was more just theories. And so I was putting the theory into action, and I said, I'm switching my major, and I want to be more geared towards investments. And because it was just such a logical place for me to say, hey, you can take any edge that you can develop, and you can go apply it in the markets. There's lots of ways to make money, and if you don't know what you're doing, there's lots of ways to lose money. So you have to educate yourself as to the best ways to trade that fits your personality. For some people, that's an active approach. For other people, that's kind of a more managed, a little bit more, do a little bit of planning, put it away for a while, and then see how it does. I personally am biased, Jeffrey, towards the technical side of things. I really believe that while fundamental analysis is very important in the long term, as they say, in the long term, we're all dead. The bottom line is, as a trader, you have to know where things are going on shorter time frames to be able to control your risk, manage any kind of drawdowns, and keep them at a level where you come back to play another day. If you have a rough day, you've controlled any damage, and then you position yourself to be around to take advantage of the next upswing, the next major move that you predict. So from my real key edge, technical analysis shows me what the market's doing, where I need to be in tune with that flow. And as everybody's probably learned, the trend is not just your friend. I like to say the trend is your only friend when it comes to really active short-term trading. Because if you're fighting that tide, you're really going to find the going very difficult compared to, hey, if I'm in tune with that, I'm able to scale out, take some profits along the way.
Yeah,
and then
you could be a little wrong and still do well.
Yeah, exactly. I mean, that's the secret: is don't be wrong big. Be wrong small, and when you're right, be right bigger. And that's most traders do the exact opposite. They get a little profit, and they say, "Ooh, I better lock that down," because they're afraid of it turning into a loser. And you've got to learn how to trail your stops, trail your position, so that basically you can stay with your good ideas longer while getting rid of your bad ideas quicker. And everybody's got bad ideas. The reality is that the difference between successful traders and unsuccessful traders is trade management. How do you manage your way out of your bad ideas quickly and keep on those good ideas, or come back to good ideas again and again? I've had a number of trades where you make a good profit, and when a stock, look to come back again to that. Don't just think you've missed it forever. So market structure is very important to me. You have to look at what's the right structure for a trend. And that's why I named my site BigTrends.com, because we're looking for the major uptrending or downtrending structures. And what I love about options trading is that give me a view. If I have a view up, down, or sideways, I can tailor make the option strategy to any market condition. So that's what really attracted me from initially starting to stocks and then moving over to options.
So all the things you just talked about are really key details that you mentor all your students in on your site. But how long did it take you to learn all this stuff? Did you learn from somebody else, or was it something you just picked up from trial and error, and a lot of people actually get wiped out because they're trying it and they have to go away and come back?
Yeah, that's a great point. I mean, I definitely went through an initial trial and error stage for the first couple of years of my trading experience. I was buying the cheapy options that are low probability, hoping for the home run, and I was getting too many strikeouts and not enough of the big wins, because if you buy those out of the money options, you're going to put yourself in that position to have a low probability strategy that has big winners only occasionally. I adapted basically to take a more conservative, risk managed approach. We like to use in the money options, for example, as a much more of a stock substitute strategy. You might not hit the biggest leverage home run on the option gain, but you're still going to get a very nicely leveraged return compared to buying the underlying equity. And so for me, it was a little bit of trial and error in how to manage it, and as well as really diving into, as I said before, education. I read so many books. My wife would laugh at me at night. I'd be reading trading books after working for an investment firm during the day, and she said, "You need a hobby. That's all you do night and day." I said, "This is like my hobby, but it's a job too. It's an opportunity, but it's a passion." And so when you have that passion for it, you are hungry to learn. And so I read a lot of books. I also learned how to code systems so I could actually go back test strategies back in the early 90s when it was DOS-based program. That was a little bit heavy at the time to learn, but I knew that I had to put numbers behind it. So when I wrote my book, Big Trends in Trading, you notice it's got loads of different whole system summaries that say, here's why this VIX volatility index system has an edge, or the put-call ratio system has an edge. So you literally can go through and say, okay, the data's been run across many years and many, many thousands of points of data to know you have an edge. If you don't have an edge, you shouldn't be trading or investing. If you have an edge, that's when you want to apply your method consistently. Not get too high or too low, but really manage your emotions, kind of gradually attack it with just managed amounts of your capital in each trade. Never load up on a trade. You want to spread yourself out across a lot of different ideas when you have a trading edge.
That just got me thinking about something interesting is when you were coding in DOS or doing things on paper even in the 80s, do you think that actually helped you rather than hurt you? Because I know now people using the easy software, they just get too carried away with relying on things, not actually understanding how it works. And I'm sure having it written down on paper so many times, you can just picture what's going on with the stock in your head.
That's exactly right, actually. One of the best things that I ever did, I did an internship with a broker when I was at Duke, and I was trying to learn the business and learn, kind of both sides of that side of the business. But he was doing his own analysis by hand. He was plotting, because back then you didn't have all this technology, so you had to do the plotting by hand. And like you said, Jeffrey, it really does make you that much more in tune with how the markets are moving. And I think also what it was good for is that it keeps you focused. There's over 3,000 optionable stocks.
Right.
So from that perspective, if you're going to try to trade all those stocks and keep up with all those names, I don't care what kind of scanning and such you have, you don't quite get the pulse that you get if you're focusing on a fewer core names that you really know well. Yeah. So I'm a big believer that you want to know those core names well, and then if you happen to spot some new things popping up based on patterns, great, you can add those into your mix, but really know those core names well that you like to trade. And that's why we have a number of services at Big Trend, some of which focus on just the index options or just the ETF space or any of the other specifics or just the big name momentum stocks that really can move both ways. So you really can focus yourself on whichever area you want rather than trying to be a jack of all trades and a master of none.
Yeah.
Okay. Well, Price, running a little long on time, so thanks for joining us today, and we'll have Price on again for Heist Labs in a bit to talk about his website that he mentioned a couple times in this interview and the services it has. So remember, no matter where you are in the world, you can join Price live at the Three Gurus Global Trading Webinar as one of the three gurus on March 3rd, 2010. And Price, do you know what topic you'll be talking about yet, or is that going to be a secret and people are going to have to find out?
We won't keep it a secret. We're going to keep the content a secret for those who attend, want to make it worth your investment. It's a very reasonable entry point to get started there. But yeah, I'm going to be talking about selecting the right stocks and the right option strategies using dual time frames. So actually combining two different time frames. You want to know what's happening on the short term and in the bigger picture. So we'll show the Three Gurus traders how to combine those time frames.
Okay, great. Well, thanks for joining us. We'll see you next time.
Thanks, Jeffrey.
Bye.